financial argument. Follow us on YouTube.
I have a special guest for us today. I came across this site, want to say late spring, early summer. Every time I come across an article that's been posted by him or Zero Hedge or others that are reposting his work or a video, I always find myself fully engaged. This man is well researched. Our guest today is the owner of Small Gold. It's SMAULGLD.com. And it focuses on real estate economics, gold, silver. He has a background in international law. Louis Camersano. Louis, thank you so much for joining us.
Thanks for having me, Daniel.
Well, Louis, let's start off with your website, actually, just to give people introductions. Our first interview. What can people expect when they go to the site? How often are you posting? And what are your main focus and key points?
Okay, so smallgold.com focuses on general economics, real estate, gold, and silver. I try to post updates every day, and on the gold and silver side, I keep track of Russian central bank purchases, Chinese central bank purchases, Shanghai Gold Exchange withdrawals, to get a sense of what's going on in the Silk Road and gold demand. I cover Indian gold imports, Indian silver imports, and then I also do monthly updates on all the sovereign mints, the Perth Mint, the US Mint, and then the quarterly Canadian mints. So that gives you a background of just solid research on what's going on in the gold and silver markets. Then I do analysis on the economy. For example, recently I'm focused on the concept that the Fed, Daniel, may start buying or wants to buy or has floated the trial balloon of buying stocks for its behalf. And we know that the Swiss central bank buys stocks, the Japanese central bank buys stocks. So I try to focus on trends that are happening in the economy as well. And then I also cover real estate. I have a real estate background. I ran a real estate portal for about 10 years. And so I cover that as well. So if you go to the site, it's all laid out in tabs: gold, silver, economics, real estate. And then there's a daily update in any of those topics. And then I also try to post at least every other day on the Small Gold YouTube channel. And I'm very active on Twitter at Small Gold.
Well, let's talk about the behind the scenes of the precious metals market. Yesterday, we had a big move down, a lot of selling coming out of London right at the get-go. And, what are your thoughts on yesterday specifically? And then if you could just go back, I know the filings are not current, but if you could go back and just give us an idea of what's going on behind the scenes with central banks and sovereign wealth funds and larger funds moving into physical precious metals. Is the demand there? Is the demand not there? But if we can start specifically, your thoughts on yesterday.
Well, yesterday it looked like they took advantage of the fact that the Chinese markets are closed, and basically it looked like another smash down, naked short selling for no particular reason. There was no news yesterday why gold or silver would be both taken down, and they were. And there was no corresponding rebound in the Chinese markets because there was no corresponding Chinese market to be open. So I think we've all seen that. It happens every few months just because. There's no particular reason for it to go down, but it does. And that just highlights to me that when people say the central banks are losing control, I actually think they don't. And it actually segues into the question you asked about central banks buying shares, because when central banks buy shares, what they're doing in effect is putting a further stranglehold on the market, because they're actually not just setting interest rates, which is already a form of manipulation, but they're actually participating in the market and buying mining shares.
Well, and then there is no market really once they're buying.
Correct.
And they're buying any shares as well. So they're buying, Google, IBM, Apple, and mining shares. But specifically with the small mining market, which is a very tiny compared to the overall market, in precious metals, even smaller than that. You look at, if you're buying mining stocks and this all blows up in your face, they can make a lot of money with mining shares going up. But having a position, as it wouldn't take much. Just a little selling, you could turn the entire sector down.
Correct.
So people did see your story. It went viral about Norway and the Swiss buying gold shares. So do you think this is ultimately just a form of them being able to control the market more? Because, I mean, it's kind of shocking that they do it in the open, that they file this. I mean, if people are like, oh, the Fed is thinking about buying stocks. I've thought for 20 years they're buying stocks.
Yeah, well, the Fed, we don't know what they do, actually. They are, because there's no audit. But Janet Yellen went to great pains to say that we are not allowed to buy stocks. And when she was asked directly by a congressman, do you want to add buying stocks to your, quote, toolkit? She said, oh, well, no, we're not really asking for that, but it's something Congress might consider if there's a problem. And you know what that is basically saying? That, yeah, that's what she wants to do. So Congress, why don't you start thinking about it? We're not thinking about it. I just mentioned it at Jackson Hole. You know, she had a speech at Jackson Hole where she said the future policymakers may wish to consider buying a broader range of assets. So it's never enough. She says we can only buy government corporate bonds and agency securities, but that might not be enough. In other words, they think buying stuff is somehow going to help the economy. It's not. All it's going to do is boost the market. So them buying stocks has no impact on the economy. It only has an impact on the share prices. They're just repricing the shares with no corresponding benefit. The company's not doing any better. They just happen to own more shares of the company, so the price goes up. And that's what I think the biggest problem is right now, is we're getting this divergence between the economy and markets. And we have global growth at 1%, U.S. growth at 1%, and that's bogus growth anyway, because they include in our U.S. GDP spending on utilities, housing, healthcare. That's not good. That we have to spend more for that. And they're saying, well, that adds to the economy because our housing costs go up and healthcare costs go up. So, you know, get sick and raise the thermostat and help the GDP. So this whole thing is ridiculous what the Fed is doing, thinking that they're going to help the next recession by not just buying government bonds, not just by lowering rates, but by somehow interjecting itself into the stock market. And I can see our Congress, people say, oh, they'll never go for that. Of course they will. The stock market goes down and there's supposedly this big economic disaster. All Janet has to say is, I know how to fix this. Congress, give the Fed the ability to buy shares and we'll get that stock market right back up. And then who does that help, Daniel? It helps the rich people who have shares. It doesn't help the economy at all. So you can have negative growth. You can have and that's the thing right now. We already have a collapse. People are talking about there's going to be a collapse. A collapse. It's already happened. The economy is horrible. If you take my GDP number that I just gave and you strip out the spending, that actually hurts us. We're in a terrible recession, perhaps a depression.
Sure.
And yet the stock market's at all-time highs. I can see that diverging even more.
Well, and it's funny in a crazy way. Them buying stocks is quite the upgrade. Buying Google and Apple seems to be much more sustainable investment for the Fed to own, not that they should own that, than buying treasuries and sovereign bonds that will never be repaid back, or worse, with a negative yield, be guaranteed to be defaulted on.
Correct. They can improve the value of their portfolio, that the junk that they're holding, by owning shares. But Daniel, another thing I did when I looked at the shares that the Swiss National Bank owned, the Norwegian Central Bank owned in the United States, and I came up with they owned mining shares, and you just mentioned they own some of these top shelf companies. They also own thousands of shares. A lot of them are absolute garbage that don't make any profits. They own, and I'm not saying that these stocks are garbage. I don't want to defame any particular stock, but they own stocks that don't make money, like Zillow, LinkedIn. So they're not just buying stocks that pay dividends, that are growth stocks. They're buying stocks that have been out 10, 20 years. And my concern is that when central banks start to buy shares that don't make money, and that these companies are rewarded for not making money, they can then run their companies on the basis of what the government wants them to do on non-financial metrics. So if they want them to hire refugees, or they want them to or they want them to issue debt so the central banks can buy it. Whatever it is, the more control central banks have over companies, they can direct corporate policies. And if those policies aren't necessarily profit maximizing, doesn't matter, because the reason companies want profits is so the share price goes up. But if central banks say, look, do this instead, don't worry about profits, we'll make the share price go up anyway. Well, who benefits from that?
Yeah.
The people who own the shares, the management of the company, and the Fed. Meanwhile, the company's not producing any real value to increase its share price. It's just doing what the government and the Fed tell them to do.
So, Louis, you're a very smart guy. Let me ask you this: if you're an investor looking at this, there are no markets anymore. They're all manipulated. You've got precious metals are constantly with a strong headwind from central banks. You've got major indexes being propped up in countless of ways by the central planners, and you've got currencies that seem to be, at the very least, approaching their final death throes. What do you do? Where do you save your wealth? What do you do to invest?
It's so hard, Daniel, because what they're trying to do is make things like gold and silver and off-grid assets less valuable by moving people away from them. So, for example, gold and silver. They know people want gold and silver. So what they do in the West is they say, we've got these things called ETFs. You don't have to take delivery. You don't have to pay the storage fee. You don't have to worry about insurance. You can buy gold and silver at a mouse click. They love that because then all the gold and silver is rolled up into a custodial account at JP Morgan or HSBC. Then they can control the physical market, and you never get anywhere near the physical market. Same with the COMEX contracts. They want you to buy futures contracts. That's how you buy and sell gold. The same with, if you're going to buy and sell gold, do what we do. Buy shares. This way, if they're involved in the paper digital game, they can control that as long as they can keep you away from the physical, because there's not enough physical gold and silver. And I'd done a blog post and a video on this, where if the average person, the average U.S. worker, 1, 2, 3% of the U.S. workforce, just those that are working, decided to invest in silver, there just wouldn't be enough. It would be in the hundreds of millions of ounces a year, and there's only 800 million ounces of silver produced a year. It would be too much. So they want to steer people away from the physical asset. Now, what they haven't been able to do is steer Asians away from physical gold and silver, because as I mentioned, this Russian Central Bank, People's Bank of China, Chinese Shanghai Gold Exchange physical demand, and the Indian demand has been sky high the last few years. However, this year, Daniel, physical demand in India and in Asia are way down because the price is way up. And why is the price way up? Because Westerners aren't necessarily buying gold and silver physically. They're buying these ETFs, and they have record open interest on COMEX. So the Westerners are still driving the price on the paper digital side, and you saw yesterday how they're able to drop that down, whereas the Easterners are price sensitive, the Indians and the Chinese, and they buy less when the price is high.
You know, with demand, I have seen the demand is falling off, though. I mean, is it Asia, or is it just? Do you think that's the scenario? It's Asians are not buying it because gold is up, what, $200 an ounce?
Yes, I've been tracking it. The Asian gold imports are down 40, 50, 60% month over month every month this year. The Shanghai Gold Exchange physical withdrawals are down 35, 40%. Even the central bank buying at the People's Bank of China and Russian Central Bank are slightly lower than last year. So what has been the demand has been supposedly on the ETF side. There's record holdings right now in silver ETFs, record holdings in or record increases in the gold ETFs. The gold ETFs peaked in 2012 or 13 in amount, but they've gone up, and they had some withdrawals, but they've gone dramatically up this year. So supposedly all that physical gold and silver is flowing into the ETFs from Western demand, but the Eastern physical demand is indeed down.
You know, a lot of money is flowing back into the mining sector in a big way. You know, I've been to several of these shows recently, and you're still not seeing the retail crowd, really. They're still small shows. But the people who are there are hedge funds, people from JP Morgan. I know nobody's a big fan of them. But you know, the Chinese Sovereign Wealth Fund. I've seen more billionaires at these shows than ever before. It seems as if there is big institutional money coming into this sector. So I don't know, you know, when it comes to the mining shares specifically as opposed to the physical metals, but it seems like the trend of the mining shares, it may be its time that cyclically it's going to be a bull market.
It has to be, because if there's going to be a bull market in silver or gold, the mining shares will always do better than the underlying physical metal. And the interesting thing about the mining shares is they got beaten down more than the prices of gold and silver got beaten down the last 3 or 4 years. And also, if you have central banks, I like to use the example of the Swiss National Bank. They sold off a lot of gold in the early 2000s. They haven't added any gold. None of the central banks are adding gold to their reserves other than China and Russia and a little bit in Kazakhstan. But they're buying mining shares. So that indicates that the mining shares, any digital or paper product, seems to be up for grabs. And if you have a tailwind of central banks buying shares in general, they're going to have a portion of them in mining shares, it seems. And if you are a silver stacker or you buy gold and you think they're going to go up and you think you want to get some benefit on the upside, some people may think, hey, I'll take my chances in the system and I'll buy these shares. Because we saw this year, the gold and silver went up, 25% gold, 40% silver. But the mining shares, many of them, doubled, tripled, and quadrupled.
Sure.
And that's not atypical in a bull market for the mining shares to dramatically outperform them. But they also go down much more when there's a bear market.
Absolutely. Yeah, no, they did worse, of course, than the physical metals on the way down, but certainly crushing it in 2016. Although this is a pretty significant pullback we've seen this year. I've talked to Rick Rule, who you're probably familiar with. He's talked about these gut-wrenching corrections being very normal in the sector, but it is hard to compare this cycle to any other, just because there is so much central bank intervention and there is so many different things going on, like negative interest rates, which has not happened in human history. This is the first time. So
Great.
Just getting back to that question, though, where do you suggest people look to? I mean, is it just about having a good diversification of cash and precious metals, maybe a little bit of stock, a little bit of real estate?
I think that because if there wasn't for the central bank intervention wild card, which means not only are they in the market, you don't know how much more they'll be in the market. And that could be a benefit, because if they're going to buy something, there used to be the Greenspan put, the Bernanke put, that stocks just don't go down because they won't let them. Well, if Yellen decides to buy shares, that's like the Yellen call option, because they're going to go up, because she's going to entice people into the market, because the Fed is always going to be possibly ready to buy another tranche of shares. So I think the only thing you can do, if you decide the only thing to do is buy physical, the only thing to do is buy shares, the only thing to do is buy real estate, you could be wrong. Even though you're right on the fundamentals, you're just not taking into account central bank intervention, which I think now is part of the market. And in fact, at one point, if they keep this up, is going to be the market. They're just going to fix prices and buy stuff and tell you what to buy. And that's the real danger. You can't really trade on fundamentals or even charts if central banks can just come in and do what they feel like doing.
Yeah, that's a good point. Who knows? In 20 years, it might be, they just the rating agencies review a company and throw them in. Oh, you're at the 7% fixed category. You're at the 3% compounded category.
Yes.
On real estate cash flow, do you see any opportunity for people right now in the United States?
Probably, because people still need a place to live. And unfortunately, most people don't have the cash to pay for, here's what's happening in real estate. It's the same what's happening in the stock market. They're highlighting that real estate is higher, stock market is higher, and therefore the economy as well. No, that's the worst thing that can possibly happen to the average person who's not making more money if real estate is higher. So that means fewer people are going to be able to buy homes because they'll never be able to save up for them. So people who have enough money to buy rental properties will have a ready source of people that are going to rent them. So I think there is potential. That all depends on what you pay for the property and whether you can get good renters and so on. But I think that has been a growth area for, as the home ownership rate continues to fall, which I expect it to. Well, that means there's more renters. That means that market opens up. And because there's fewer people who can afford to buy rental properties to rent them out, they should have a good client base to sell to.
Last question, Louis. What are your thoughts on the U.S. election? You think Trump has a shot here?
Well, if you look at every day, 2 or 3 times a day, Trump has a rally. He draws 10, 20,000 people at the rally. He has 10 or 20,000, 30,000 people watching online. And then you look at Hillary Clinton, she shows up at a place every 2 or 3 days to a couple of people. If it's all based on enthusiasm, then he should win, because there's really no enthusiasm for Hillary Clinton. But then again, she's got all of the media promoting her and attacking Donald Trump, which, Daniel, that may turn out to be a bad thing, because most people are starting to hate the media. And the more they see of that, that may just turn them off and make them vote for Trump.
Well, she's got a large support from the dead population. They're backing her, 10 to 1 there. Wait, Lewis, Small Gold. Everybody check out Small Gold. Okay, SMAULGLD. It's a website that I'm sure many of you haven't heard of, but it's definitely, I think it's going to be one of the better sites that you'll see over the next year. I wouldn't be surprised if this is one of the top gold sites out there. Again, Lewis, hope to talk to you in 3 or 4 weeks. You're a very smart guy. I really appreciate your time.
Oh, Daniel, thanks for the kind words, and thanks for having me.